And we will leave you with this. Canadians are getting paid more for working these days, but they are producing less. Now, that doesn't mean Canadians are slacking. They're actually putting in more hours. But the economic output of each worker is declining. Now, that can be a function of not investing in new machinery or new technology to enable workers to do more. New data from StatsCan shows that labor productivity fell in the second quarter by 0.6%. And it's not a one-off. You can see there it marks the fifth quarterly decline in a row. Here's how our guest put it yesterday, quite bluntly.
More people are working.
Yeah.
They're working more hours, and we're producing less output. That's scary. So if you look at GDP per capita, that's falling. So on a per capita basis, we're definitely in a recession. That's not how we measure recessions. We measure it by the absolute size of the Canadian economy. But the economy is doing horribly. And this is not just a cyclical issue. This is something that really matters for how well off we'll be in the future and how well our kids will be off. So it's a really big deal. I think that's one of the more depressing things. Not that the Bank of Canada can do a lot about it, but that's one of the more depressing things in the last GDP report.
And it's not just the long-term risk to Canada's competitiveness that's a worry. It could also lead to more inflation. If we can't increase the supply of goods and services quickly enough to meet demand, prices will go up and consumer purchasing power will go down. And that is something we should all worry about.